Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 4th of October 2019 and the much-awaited Non Farm Payroll report has been published, and we shall give our and the initial market response to it and its potential effect on gold and silver prices. So let's investigate. For the past 2 weeks, we pointed out that today's non-farm payroll report is extremely important, as it is likely to give us a relatively clear indication as to whether the Fed will reduce rates on the 31st of October, and if so, by how much. Earlier this week, we saw the worst manufacturing figures for the past 10 years, which turned around the declining gold and silver price. And yesterday, we saw below expectation figures in the ISM non-manufacturing index, providing a September figure of 52.6% against an expected 55.3% and against 56.4% achieved in August. Well, the non-farm payrolls have now been announced, and they come in at 136,000 new jobs, compared with a disappointing 168,000 the previous month, but more or less in line with the lower end of market expectations, which ranged from 135,000 to 150,000. On the positive front, the unemployment rate for September fell to 3.5%, compared with August figures of 3.7% and expectations of 3.7%. Average hourly earnings did not rise at all, compared with 0.4% in August and against expectations of 0.2%. Now, to some extent, this has actually settled markets, which were reeling really against the poor manufacturing data and global indications that world economies are slowing down quite considerably. Now, at the time of writing this, which is 1830 British summertime, the Dow is up 231 points. At 26,432. Gold is holding pretty steady at 1507, and silver, although it knee-jerked down to 1731, has regained some composure at 1759. The market probability rate of the Fed cutting rates in October as a result of this today's announcement has declined from 86.5% yesterday to 76% after the payroll announcement. The dollar index is holding quite steady at 98.9, though down not quite but almost half a point from its week high. Many analysts are predicting that we have seen the start of a slowdown in the US economy too, with a mild recession expected towards the second or third quarter of next year, unless a major financial stimulus is injected into the economy. Services and household data is an important area, and we now have to wait and see whether the manufacturing crisis will adversely move towards services and eventually into households. If it does, then recession is most certainly on the cards. Now, Larry Kudlow, President Trump's economic advisor and director of the U.S. National Economic Council, told Bloomberg today that although there is some soft data, using his words, there is also very good data out there, and the 3.5% unemployment rate is at a 50-year low, and it's well distributed amongst U.S. citizens. The payroll numbers were further supported by an upward revision for July and August of some 45,000 jobs, he added. He quotes that also that the household survey was up 391,000, which produces ultimately the unemployment rate, or dictates the unemployment rate, and dovetails into the employment participation rate, all of which have risen. He believes that the economy is moving into a stronger position. Now, we have some doubts about that, but nevertheless, this is what he told Bloomberg. The ISMs, of course, suggest a differing position, but Kudlow says it's still in positive territory and that the manufacturing slowdown is not the result of the China trade issue, as many commentators have suggested. Because although he admits that manufacturing exports to China has fallen, the largest problem the US has is with Europe and Japan, with a loss of over $150 billion worth of exports to Germany alone, and a much larger figure to Europe as a whole. He also raised the fact that the October 10th China trade talks are looking relatively positive, and the US economy has grown 2.5% in the first half of 2019, and he is expecting a similar figure in the second half. China, on the other hand, are in worse shape, and Kudlow claims his team are going into the trade talks open-minded to do a deal. Now, he also suggested that they may have some pleasant surprises when they are concluded, though he did admit that the one factor that could severely hamper them, other than, of course, not meeting President Trump's expectations, is if the Hong Kong situation worsens, as the United States is committed to the Hong Kong freedom movement. Now, tomorrow we shall, of course, produce our weekly update. But meanwhile, traders are unlikely to take new positions over the weekend, and we shall wait to hear how these figures are received overnight. We are of the opinion that until the Fed meets at the end of the month, gold is pretty well underpinned and silver will vacillate somewhat. But we shall say more about this tomorrow. We most certainly, though, do not see skyrocketing prices or significant slump in the coming week or two. What is your opinion of the figures, and how do you see them affecting precious metal prices? Do share your thoughts. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners. Glory, glory, hallelujah.